mutual funds. So in this module we are going to learn about mutual fund actually. So mutual fund is just so simple. Just like when you think of it, it's just like a money pot whereby many people come together to put money in that pot, and then that pot is being given to a professional fund manager, and whatever profit or loss it comes, you share it based on how much you contributed. Just like from the word mutual, people come together, funds. It's just like a fund people put together and they give it to a professional fund manager, and they use that money to invest into various assets, and as they are making money, they are sharing the profit with the investors, and if they lose money too, everybody is going to feel it in the body. So that is the simple definition of mutual fund. So, and then why mutual funds? So imagine you want to buy a house worth of 50 million naira, which is impossible. Maybe it is impossible for you to do it alone, and maybe we have now 500 people. If you have 500 people to contribute maybe 100,000 naira each, that is possible. So that is what mutual funds do with investment. They make big opportunities affordable for everyone. So how do they work? The thing is that you buy a unit. We have different kind of mutual funds. So if you want to buy any, it's like just units. Some mutual funds, maybe they are 100 naira per unit, some are 500 naira per unit, some are 50 naira per unit. So you buy the unit. So when you buy the unit, the fund manager invests in different assets like stock, bond, money market, and so on. So profit are shared back to you depending on how many slices or units you own. So it depends on how many, just like shares or stock is how many units of that particular mutual fund you are holding. It will based on your profit. That is how they will share your profit back to you. So another thing is that when we talk about mutual fund, we have different types of mutual fund. Different types of mutual fund. We have equity funds, which focus on companies shares. This one is very high risk. So when you are investing into mutual fund, you need to also consider your appetite risk. So we have equity funds that focuses on shares. This is very high risk. We call them high risk, and then the same way they are high risk, they also bring high reward. So another one is we have bond funds. So this one is like this one is more safe, steady income, and just like lending money to government, because this bond fund, any money being put into this, it will be invested into bonds. We also have money market funds. These are very safe, short term, just like saving in bank with better returns. We have balance fund. This one is mix of both stocks and bonds. We have index fund, something like copycat of a stock market index. We also have ethical, a lot. I think it's about maybe 29 types of mutual fund that we have. We have halal funds. This one that is religiously ethical, like maybe people that don't want interest, people that their religion belief does not support interest. There are some kind of mutual fund that has been designed for them. So this is just for example. Before you buy that mutual fund, you need to understand, okay, what type of mutual fund am I buying? So you need to understand the mutual fund you are buying based on your risk level. So another thing is that one of the benefits of mutual fund is that it has easy entry. You can start with as little as even 2,000 naira, 5,000 naira, and as much as you have. So it's also safe. Your money is spread across many investments, and this help you to reduce risk. Also, professional help. You are not the one that are managing the money. You are not the one checking the market. Maybe the market is going up or the market is coming down. So it has been managed. It's been managed by expert. Expert. You don't need to do anything. Another advantage is liquidity. That means you can withdraw your money when you need it. I used to I used to put some of my money into mutual fund for emergency sake, because if you sell your mutual fund, your money is going you are going to get your money quickly. You don't need to wait for when the market will open or when the market will close. So it is high liquid. And also these are the limitations of the mutual fund. You pay management fee. because the way they make money is to charge you. So they also charge you so that they make money from the business. I mean, for them managing your money for you. So return are not fixed. So the return of mutual fund are not fixed at all. It's following what is happening in the market. If the market falls, return may drop. Another thing is that you don't control where your money goes. The manager decides. You don't control that. Okay, let my money go into stock, let my money go into bond or this or that. It's the fund manager that decides that. So we have some mutual fund in Nigeria like Stanbic IBTC Money Market Fund. We have ARM Money Market Fund. We have Cariwas Money Market Fund. We have Coronation. We have Setcrest. A lot. We have Afrinvest Equity Fund. We have a lot of them in the Nigeria market, and all are regulated by the Security Exchange Commission (SEC). You have to be sure that the platform, the companies, fund you are investing your money into is regulated. So another thing is that mutual fund are teamwork investment. They are good for beginners who want to grow their wealth without stress, and then you can start small, stay consistent, and let compounding do the magic. So don't wait till you earn big money before you invest. So the earlier you start, the bigger you grow. So this is all about mutual fund. As I told you earlier, you can get mutual fund on Cowrywise, get mutual fund on RI Invest, get mutual fund on Optimus.ng, get mutual fund on United Capital, I Invest. You can get even Invest Nigeria or Nigeria Invest. You can get it. You can get your mutual fund there, and you invest into all these mutual fund. Another thing about mutual fund is that they pay dividend quarterly. So some of them pay dividend quarterly. After 33 months, you'll be receiving some money into your bank accounts, and this is how it works. So thank you.